Good evening, all. Ira Epstein with your Spider ETF market wrap-up, and this wrap-up is for Thursday, the 17th of November, 2022. You do realize next week we've got abbreviated week. We're going into Thanksgiving. So you've got tomorrow, and you got probably through Wednesday, no later than that, and then traders are pretty much gone and doing whatever they do. I hope to be here, but we'll see. You know, if it gets too light a volume, I might take a day off. I will be in Chicago. I'll be right here, but I could always use a day. All right, let's talk about what we have going on. In China, we still have the situation, the terrible situation of COVID getting worse. And we keep reading about more lockdowns, and that's weighing on the oil market. That's going to weigh on anything to deal with China. We've had in the U.S. stocks, if you keep your eye, the Dow strength, but you haven't had strength like that in the S&P, the Russell, or the NASDAQ. And I think the Dow can't do it on its own, so you got to be very, very careful of anything you want to own there. This morning, when I was doing the morning subscriber video, I was pointing out to people everything was red. And it really didn't change very much. You got a streak here of green, a little bit over here in GM and Ford, but that's about it. Not much really going on in the marketplace. And probably, interesting to watch the change of the guard in the House of Representatives. Goodbye, Nancy. And she did her farewell song today. She will stay there, and that's great. She did a lot of things, but it's time for a change of the guard. It's also the same in the Senate, okay? Believe me, whoever wins, we should get some younger people in there. Let them take the reign. There's a point at which you have to know how to turn things over, all right? Or you're doing them for hobbies and you hang around there. But there's a lot of very young people that should have a say in all this. When we look at DraftKings, all you did is fill the gap and you ran out of steam. I'm not saying it can't go higher, but I am saying there's no reason to. That's the problem. The market has an uptrend, higher lows, higher highs, but here's why. You're now fighting at the 100-day average, then the 200's right there. The Bollinger Band's much further away. These are the resistance points that the market has, the 200 and the 100. It is in an uptrend. It fell back today to regroup, to get reinforcements for its strength against the 18-day average of closes. And it's still bullish. That's the way to look at it. Do I think there's a lot of upside? That becomes the question right now. When we look at momentum, sort of evening out. So trend up, bias up for certain on both of those, and momentum still up. All right, I can't argue that, but if you buy it here, do you really want to put a stop all the way under 1140? And that means you're going to risk almost 30%. I think that's crazy. When I look at LIT, look at this straight downfall. So here's a market that got overbought, got up for the first challenge to me, the 100, 200-day averages, and I think that was the kiss of death in the market. It had done this before. It got to them and it fell back. I pay attention to those longer-term averages. It is not a spot I'd get bearish at. It's a spot I'd no longer be as bullish at, and that's where you start liquidating if one were riding the trend up, which you could have been in an uptrend. In Apple, I'm still surprised it's holding as well as it is. I mean, I just keep hearing the consumer is going to pull back here. And that's what the markets are counting on, that they're going to get scared. Interest rates are staying up. This is a pricey products. Will it be able to? A warning sign, and I'm not looking for a top, but a warning sign would be if you take out today's low. It's an outside day up. Take out the low of that, you could open the door up for a retest here. Let's assume that doesn't occur, and you've got joy on your face. Okay, then the 100-day, the upper 200-day average, and the Bollinger top. Those are your next targets. I think that's the game that you're in. One of those two is going to unfold now. Disney, that was it. It's rolling to the downside. So unless you get back over 95.22 in pretty fast order here, I'm looking for this market to open the door up to 87.25 again. Wow. XLF, I've been telling my clients, at least in my morning subscriber videos, that again, the first challenge of a 200-day average, when you haven't been at it, months upon months. It's not the spot you get long. Use it as a broad liquidation zone and then try to come back in afterwards, maybe at a better price. Well, you're still fighting your battle there in the 18-day average. The trend is down, the bias is up, and now you got a bigger problem. You lost your embedded reading. You know, I keep mentioning the word embedded reading. Take the enhanced Bollinger Band course. Your eyes are going to open up. You're going to get a smile on your face when I say these things because you'll understand it. And it's so simple. I swear to you. 13 chapters, each, 10 minutes long video. You follow what I do. You do the same thing. You see me do it in the morning, walk you through it. I slam it, slam it, slam it. And all of a sudden you go, I got it. I do get it. Okay. XSD, be careful here. You're losing the embedded reading. So the upside momentum running out. I think it's a lethal combination, the 200-day average and that. But I also thought you were going to have resistance here the same way. And you went up to another level. That can happen. Doesn't matter, okay? The market's been good. It was good to the bulls. This could have been the zone they're out for certain. That would be the zone they're out if they were with me. You finally did embed, but after you had gotten through that number. Now you're not looking to be a buyer on the pullback if you lose that. In the home builders, so mortgages went down today. They're at 661 on the 30-year. Come on. They were just over 7%. That's important. So people might have thought, well, that's what's kicking it up. Take the name off the chart. What am I saying? The first challenge of a 200-day average in a Bollinger Band on the upside is the spot the smart money comes out. If this were on the downside, the same way. The lower Bollinger Band 200-day average down there, another covering short spot. That's what you've got. The market's done much better than I thought it would, to be honest. In the energy sector, a while back when this occurred in XLA, they weakened the market. It went nowhere. It didn't get much higher than it was back here when it was fully embedded, and it's rolled very gradually down to support at the 18-day average of closes. The key is China going to get over this hump of COVID, or does it keep getting worse? If it keeps getting worse, there's problems. There was an interesting Bloomberg article today that I included the whole article, the link to it on Bloomberg, in my newsletter. And they do allow that. Bloomberg does. And it's a great article. It talks about the fact that what if you get into a room, President Biden and his staff of little merry men and women, let's get it both ways, they go, we're going to refill our strategic reserves between $72 and $67. And Saudi Prince, what if you say that between 95 and 100, you'll pump more oil? And what we do is you get the benefit of those high prices. We're giving you a floor in the market as we have to put in millions of barrels, and we live in that number in between. This is what the article was about. And I went, darn it. It's not further inflation. It keeps markets about where they're at. You know the downside. You know the upside for a while. Controlled prices, yes. Is it legal? I have the slightest idea. But interesting. And everybody wins. It's a true win-win. I love the article so much I gave a link to it. I wrote about it first this morning. Said I read something that I thought was brilliant. And there you go with it. In GLD, higher lows, higher highs, and now you've rolled to the right-hand side. You haven't lost the bullishness in this market yet. It is still there. The question is, can you buy it cheap enough to keep the enhanced Bollinger Band there to get another pop? That's going to be the question. And obviously, what this market wants to see to get that pop is the dollar drop, not rally. Okay? That's going to be a big share of that. When you look at SLV, I have been telling you since this occurred, I have told you that I told my clients not to be buyers of this. I showed them the 200-day average. I said, that first test is too dangerous. Win, lose, or draw. You've now lost the embedded reading. You've lost that. You're probably going back to the 18-day average of closes. Copper, the same thing. You're on the verge of losing the embedded reading. If you do, back down here. I'm not bearish copper on this. Futures, yes. And I told people, I had a client that wrote me, Ira, you were bullish on copper. Yeah, I was. Past tense. Had the opportunity, had the play near the 380 level. You're 368 tonight. That's a huge difference. And I know you'll tell me, well, it's a better buy at 368. It's not. It's about momentum of the trade. I could give a darn about price. I want to catch these moves if I can. I want to catch the other moves down. I prefer not to even know the name on the chart. I know you might find that hard to believe, but it's actually in my full charting course. I take the names off charts. And the reason I do that, I don't want you to be swayed. I don't want you to say, oh, well, look at gold back then was 15. It hit 2,000. You're going to have an automatic bullish bias. You won't listen to what I'm saying. So I take them off, and I find it works. TLT, up and away, but overbought. Okay, you're up here. Now, we all know, as much as you want to believe that, okay, the long-term rates are topping out, it won't take much to change that thought. What would do it? It's simple. If the next set of CPI and labor numbers come out strong, you got a problem. Every Fed member, and I write a section in my daily newsletter called Fed Talk. And in it, I give the highlights of the different speeches that the Fed members are running around the country or doing virtually meetings with, and what they're saying. To a person, they're looking for more rate hikes. Where they differ is how far they have to go out. Not one has said it's time to cut and stop giving rate hikes. Not one. I write on it every day. Maybe 3, maybe 5, could be a whole year. Who knows? They all want one thing, data dependent. Let's see if the trajectory starts down. And today you had, was it Mr. Waller came out and he was saying, okay, they questioned him again, and he said between 5 and 7%. Well, the press picked up 7% interest rate. But he clarified it. He said 7 if things get out of hand. In other words, the numbers don't stay down in CPI and labor. That's the code word for it. But if they do, maybe 5, 5.25 is what he's thinking. He doesn't know either. Nobody knows. It's all a guess. It's data dependent. We know there's a lag time, and we know there's a stickiness to inflation. You got two elements there. So even when it heads down, you might get sections of it coming down, but you'll have sticky parts, okay? And that's what you got to always look at. What is the sticky part? How do you take off some glue, be gone, and get it unsticky, right? That's what you got to figure out. UUP, dollar still bearish. You have an embedded reading. I don't see why you're not opening up the avenue down there. I'd be wrong in being bearish if the red line closes over 21. And the flip-flop of it is I'm bullish in the euro, because if the market stays here and doesn't get the reading in red under 79, why not open the door again to the upper Bollinger Band? So you put it all together, you try to come up with game plans during the day, and that's exactly what we do in our reports here. Whether you trade futures or ETFs, we have a combo package that I think is phenomenal. Why? Your spiders and ETFs as a grouping are often based on what futures do. If you think SPY, DIA, any of these aren't, you've got a serious mistake. TLT, BND, they're different factions that they put together of either cash or futures markets, and that is what they are. And you're buying a sector that somebody put together, some names or an individual name, and away you go. SIL, that's silver on the futures contracts. GLD, that's gold on the futures contract. So you want to know what the futures are doing. You want to know here, and you choose which instrument better fits your trade style. So I cover 40 charts on the futures at 5:30 in the morning, and then at 9 I cover the ETFs, the spiders, and all that for you. So when I put it together, you come in. I'll give you an example. I wouldn't trade a palladium market on futures, but I'd certainly look at platinum and palladium in ETFs. Whole different game, different volatility, same play. So I balance which one is better at any point in time. There's spiders and ETFs that are too thin, they're too small. I'll go to the futures contract. But the key is I got two hands. I can go with either one. That's what we do the combo for. We want to help you make your own decision. We're not going to be your trader. We're not going to manage your money. I'm sitting there talking to you in a generic manner in a video, charts unfolding right in front of you. You get an idea of what's going on, why it's going on, what I'm seeing, and then you go about your own merry way and you do it. Inexpensive. You're spending more on your Starbucks coffee than you are on this in a week. You'll buy more Starbucks than this will cost you for 30 days. In a week. You might only have a coffee twice a week, 3 times a week, 4 times. Yeah. What about the rest of the month? How do you get here? All you need to do is take your cursor, move it to the top up there. There'll be an icon. Give it a click. Go to our website, iraepstein.com. Under the word research, it's there. You have a great day. If I don't see you tomorrow, I'll see you on Saturday. I'll get the videos done one of the 2 days at the end of the day. Have a good evening and a great trading day tomorrow.